Let's go to our next management. We have Thermax. That's the stock on our radar for Q2. The company's order inflow will jump by close to 70%. Margins, they came in at multi-quarter high, while the profitability and revenue growth as well came in at a very, very healthy pace. To discuss the past quarter's performance, the way ahead, Mr. Ashish Bhandari, the Managing Director and CEO of the company, joins us on the show. Hi, Ashish. Good morning. It's always good speaking to you. And, thanks a lot for being a buddy of the channel and always coming on, sharing your insights as well as giving your cue on industry as well. Well, let's talk about...
Thank you very much. Pleasure to be here.
Absolutely, Ashish. Let's get straight to the past quarter's numbers then. I recall in Q1, you had said that it was impacted, especially on the civil construction side. There was execution delays, labor shortage, elections, a whole host of factors. Have things stabilized in the second quarter, and are things looking better for the second half of the year? So give us an insight on that. And also, your margins have come in at multi-quarter highs. What's driving this? 10.5% margins, is it sustainable?
Let me take two questions and I'll divide them. First, on the market, the outlook. I would say general sense of stability. Things are better than what they were in Q1, but I wouldn't say they are as good as they were a year ago. Yeah, we still see many orders where customers have shaken hands, but the financial closure of the projects is taking longer than I have seen. We also had cases where we were ready with the equipment for delivery, but pickups were more delayed than I've seen in the past. And the third thing I would say, the construction bit continues. Yeah, it's not easy. Construction delays, managing sites is getting ever more challenging and is a big part of India's infrastructure growth story, and perhaps one of the biggest challenges that I see as the country looks to grow. In the midst of all of that, the inquiry pipeline overall looks quite good and healthy. We see a decent pipeline on bigger projects. I've been talking about for a bit that we see bigger projects coming back in. The last quarter was some example of that. And even as we go forward, we see a reasonable pipeline of big projects coming in as well. My question is around how quickly will they close? And then execution continues to take more time than what it was a year ago. So that's on kind of the numbers as I see them. The Q2 financials from a profitability perspective has one time relating to a PSI benefit that we have gotten from the Maharashtra government. This is a historical incentive for which one big portion got cleared by the state government in the recent past. So a portion of that we have taken into our numbers. The incentive itself will continue for a period. So we will see this coming in periodically for at least a couple of years. So in that sense, it's not a one time, but this has given a fillip to our numbers. If I take this out, then the numbers, I personally would like to see Thermax doing better than what we did in Q2. Yeah. Last thing I would say is on the chemical side of our business, we had some impact because the business depends quite a bit on exports, and based on the war and some of the delays on the freight side, that business got impacted a little bit, which is a temporary dip. It should recover in Q3 again.
All right. So the sustainable margins, except what you said, should be what?
So sustainable, look, we are continuing on a path of improving our margins. Yeah, if you see last 3 years, with each year, we've been moving our bottom line by 25 to 50 basis points each year. And I think that's a trend, at least for a little bit, we think we can continue on. We're also reaching a period where much of what we want to do new will require investments. Yeah, so especially putting together a renewables platform, a bio-CNG platform, a hydrogen platform. These will take some amount of investment. So I don't think the 10 plus number is sustainable in the short term, but continued improvement and crossing 8.5, getting to 9, that's the intent.
Got it. All right, let's focus on a couple of other factors then. Tell us the share of the large cycle orders in comparison to the short cycle orders. Also, if you could give us what kind of impact it can have on revenue recognition, on working capital as well.
On both of those, I think first there was one single big order of 1,000 crores. actually in two parts of 500 crores each. This will get revenue recognized over the next 2 years. So reasonably frequent. It's not like it's a one-time revenue recognition. We will have part supplies and part work happening. So the revenue will get recognized on a regular basis. Otherwise, no particular surprises, even on working capital or otherwise. Thermax works on very tight working capital. We work at a negative working capital at the company level. And we expect to continue that looking into the future as well.
All right. Your order inflow has been very, very healthy. I was looking at Investec. They had put out a brokerage number, and the order inflow has been even better. What's the outlook on the pipeline from here on? What's the sustainable run rate we should look at going ahead? Update us for the second half of this year, and what will the order book look like by the end of this fiscal?
When we started the year as well, I had said in this particular year, we see some bigger projects coming back. And this last quarter was an example of that. If I take the big project out, we have been showing reasonably good growth on what we call as base business, things that we do through our channels, through distributors, a variety of our product businesses. There, the one bit which is important to note is that our India business is where we have seen some flattening of our numbers, which is something that I would like to see come back to a growth path in the second half. The growth that has come in Q2 as well has come more driven by exports than driven by India numbers. The India numbers have grown as well, but I would like to see more growth on the India numbers. And specifically, there were a couple of segments. One is the entire ethanol segment, which last year gave Thermax a fair bit of growth. This whole 1G ethanol, as India looks to grow from 10% ethanol blending to 20% and beyond. Here, there are a lot of projects which are still on the anvil, where the sugar industry and variety of others are looking to invest. But the projects are still waiting on financial closure. So I would love to see this segment come through, and then many others, including textiles, steel, variety of other sectors where we have got good pipeline as customers are looking to invest back in. Would love to see that growth come in. So the pipeline is reasonably healthy. Conversion, I would wait and watch and see what we deliver in the second half.
Okay, all right. The endeavor, you said, is to keep improving margins, though the past quarter's numbers may not be sustainable at more than 10%. What about revenue growth? What should it look like for the year FY25 on a consolidated basis, if you want to break it up for us segment-wise as well? And since you're sitting on a healthy order book, how does FY26 shape up on that sort of a base?
I think our revenue backlog should give you some sense. We don't provide projections, and so I won't provide projections now, but the backlog is reasonably healthy, and for the foreseeable future, we don't see any major concerns in terms of liquidating that backlog. There have been some slowdowns, as I said, on construction delays and also of customers picking up equipment, but those are small in the grand scheme of things. We should be able to work those unless there are some major shifts that come into the market. So the growth that we have been showing, which is reasonably steady, good growth on top line, which then comes into a reasonable growth on bottom line with slightly improving margins. That's the trend that we would like to continue to be on.
Okay, all right. Well, we thank you for joining in and filling us with all that color for the past quarter. We wish you well, Ashish, and we look forward to chatting up with you rather soon.